Welcome back to another weekly review. We're going to be looking at the trading week of August 10th, 2026. We'll get data out of the way. Monday, we have nothing. Tuesday, we have ADP weekly unemployment change at 8:30 a.m., which doesn't really matter. Wednesday, we have CPI at 8:30 a.m. We have the 10-year bond auction at 1 p.m., so important, obviously, CPI in the morning there. Thursday, we have PPI at 8:30 and jobless claims, and then we have the 30-year bond auction at 1 p.m., and then Friday, we have retail sales at 8:30 and consumer sentiment and inflation expectations at 10 a.m. So big things really, Wednesday, Thursday, CPI, PPI, and then obviously the bond auctions at 1 p.m. can have some impact later in the day, but the big things obviously will be the inflation prints Wednesday, Thursday. So from a earnings perspective, we don't have a ton. We're out of the way as far as the big guys. So Tuesday after market, we have SMCI and we have CoreWeave. Wednesday before market, we have Nebius. I always pronounce this wrong. And then we have Cisco after close on Wednesday. And that's really it. We don't have anything really market moving until NVIDIA, which I think is the end of August in a week or two. I'm not sure. I'd have to look, but again, the big guys are out of the way, so we don't really have too much to worry about at this point in time from an earnings perspective. We could see CoreWeave and SMCI have a better response on the broader market, but as far as it's not going to be anything near like Apple or Microsoft or what have you, etc. So no big deal. As far as what's going on, that was a hell of a week. I'm not surprised at what happened. The manner in which we did it was kind of wild. 2 lockout rallies 2 days in a row is pretty crazy. But as far as what happened after we broke multi-week balance, what happened after we broke away from July's inside monthly high, it's not unexpected. It's not unexpected that we had such a violent move up once we started to accept outside of prior multi-range balance that we've been in for months. Right? You shouldn't be surprised that the market had a massive relief move to the upside after we broke the range that we were in for 3 straight months, basically. So this really shouldn't be surprising to traders. As far as how this happened, obviously extremely violent, one time framed up the entire day, basically. It's one of those days where if you're not if you're not buying the highs, if you're not basically in this early, or if you're not buying the highs, it can be difficult to trade because we're programmed really to look for fades. We're programmed to look for a balance to start to form at some point in time. Even on a trend day, you're programmed to look for a decent pullback. Every pullback was super shallow on this day. So it can be tough to try and join because you're looking for, let's say 12 to 1 p.m. You're looking for, the post-lunch relief and then, a higher low to buy. You didn't even get that. We just went straight up. So, as long as you weren't trying to fade a day like that, you should be fine. If you're trying to fade a breakaway on tape like that, I don't know what to tell you. That's tough. That's between you and Jesus because that's a tough thing to do. Not the smartest. So I've been guilty of trying to fade trend days for sure, but I think the context of what happened here is very, very important. And when we gap above, that prior inside month, like we talked about last week's video, when we gapped above, prior weekly balance range, there's just nowhere to go but up, right? So until you see a fail of said balance, until you see something fail and, we start to show signs of exhaustion, that's when you should, potentially be looking for those fades. But breaking out of a huge consolidated range like this, it's not surprising we did what we did. So it's also not surprising Wednesday onward we started a balance. Again, we have 2 huge lockout rallies in a row, and then we put in a new high on Wednesday, and then we start to fade and consolidate and basically compress range because we just had such a massive expansion move. So we have this huge period of imbalance, and then we start to balance a little bit out as price starts to calm down a little bit. So the big thing to keep in mind this week is the context of the bigger picture here. So the daily time frame, I can go into this a little bit, but this is the daily on the cash index. Daily, weekly have broken from this massive trading range, right? So looking at this objectively, until price starts to fail back below this breakout point, bigger pullbacks are areas to be bought on this market. Now, you can look at this from the perspective of, okay, well, we've had a huge move up. We could consolidate here. We're probably due for a volatility spike. Spot VIX is extremely low. we probably should be hedging somewhat up here, but at the same time, we could drop 200 points basically from here, and it's still bullish, as long as it holds, right? So like as a trader, I look at this, from an objective perspective, we're breaking out of a huge trading range. There is a lot of momentum behind this right now. There was a lot of buyers on the tape on Friday all day, and the direction for me here is continuation up until I see some sort of failure back below this multi-month break, essentially. To put it really simply, that's just kind of how I have to look at this objectively. And I think if we do ultimately fail, this breakout, we fail July's inside month range high, yeah, that could potentially be a top of the market for sure. Entirely possible. But until we see that, the default for me is to expect, buyers to try and continue the work that they've started on this break. So with that being said, pretty obviously, my bias is bullish until proven otherwise, the way that we're looking at, and that's how I'm positioned currently. That's what I was talking about all last week's video too, is that, we had a really defined range on July with that inside month. And if we started to break out of that inside month, the first thing I said was, it's very likely that we could have a very explosive moving away from an inside monthly bar. That's exactly what we got. So this is not surprising to me. As far as what, we're going to do this week, the big thing in the immediate term for me is Friday is a good example. Friday is a good example of sellers being basically non-existent in an area where they could absolutely take price back down. So we've got, two bearish imbalances to the downside here from Wednesday and Thursday, pardon me. We have a terrible structure all the way up, but we shouldn't really look for this to be filled until we start to see some failure below last week's POC and really below last Friday's excess. So we had a decision made on Friday. Basically, it was these conditions sucked. Like from a day trading perspective, like this was very, very noisy. I got stopped out long a couple of times. I actually looked short early to see if we could fill down and basically buy into 7700s. Got stopped out of that, and then looked for the long trade that I took 2 scratches on, and then finally ended up working later in the day for the trade, because it was very messy. But the big thing was Friday was aggressively bought all morning, which is immediately why I was looking for the long trade. But then when we started to fail below the range, I figured, okay, this could puke. It didn't. We reclaimed it, and that's when I went long, and that's when I actually made the day. Basically, we left a poor high, we had an exhaustive high, but we've got a decent amount of excess on Friday's low. So the big thing really for me early on is going to be 77.65 to 77.50. We'll call it 77.50s, basically, like this 15-point range. Buyers want to see acceptance of last week's POC. They want to see, holding last week's upper distribution up here. And ultimately, we want to see any moves down into the 77.50 range. We want to see those bought back up very, very quickly. We don't really want to spend time below 77.50s if you're a buyer, because that's going to open up the liquidation back down into the breakaway. Basically Tuesday's IB, the breakaway single print that took us down. And then obviously this opens up the move back test down into the 76.55s if we start losing 55s, 50 to 55 basically. That's where it would start from. Obviously you'd have to basically break below 77.20s. But if we can't hold this area, then filling back down into 7700s, down into 7660s, into the breakout is very natural. And it's still bullish. That's the thing too to consider here, is like nothing on this market, nothing on this is bearish until we start losing this multi-month or multi-week monthly basically balance range breakout, until we start losing July's inside month high. Until we start offering this zone here, I have to assume that buyers are in control on higher time frames, and we continue to explore prices higher. Last Friday's high is poor, so we have no taper on the high. We have a bullish imbalance as well going up. Basically completes back at all-time high. So the big thing really for me, if we're holding 65 to 50, looking for the long trade, looking for Friday's high to get cleaned up, obviously looking for the move back up into all-time highs, and then looking for the balance extension up into 78.50s, which is close to the weekly expected move. It's about 100 points. So 78.50 to 78.70 area is the expected move for the week, or at least what's been priced in at the moment. And then obviously if we start to accelerate higher, we're just in price discovery. The end target for that balance break is 8,000. It's like 8,050, 8,000 basically, all the way up here. So it's not actually that crazy to think that we get there, right? Like that's only really another 3%, 2.5%, 3% higher on the S&P 500. And the way this market's been moving, if we hold outside this balance break, getting acceleration higher is very easy. So using this area, using last week's POC, using this upper distribution, this 65 to 50 range, basically looking at this as, have to hold. We'll continue to be bullish if this holds. Short-term liquidations down into, 7,700, down into 7,660. They're not bearish. They're only bearish if we start losing this break. So if we have a short rotation down here, great, we'll take it. And then if we start losing this is when we can start talking about, higher time frame participants starting to fail and starting to look at this market potentially as, okay, maybe we've got, a look above and fail of multi-week balance of a inside monthly high. That's when we can start seeing acceleration to the downside. Until we see that, I don't see any reason to be bearish on this market, despite what, all the people drawing Elliott wave counts will tell you. So going to keep it very simple, especially with how Friday looked. So the other thing to note here, NASDAQ obviously is still lagging. Again, big divergence. We have, new all-time highs on the S&P. We don't have them on the NASDAQ. Tech still needs to catch up. So again, really what we want to see from a buyer's perspective is we want to see Friday's excess on the NASDAQ get defended as well. We don't really want to see acceptance below last week's POC. If we start seeing acceptance below 29,520s, then we have, a huge island gap, unfilled gaps down in here. I would think that this inventory probably pukes if we start to lose basically the lower main distribution of last week. And again, even really if we start to fill these, I don't really look at any of this as bearish until I see the broader market in something like the S&P 500 fail. I don't think that there's any reason to be bigger picture bearish until we see that fail, because what we've actually seen really is those beaten down names, some memory, some chips, some of the mags names, we've seen them start to catch a bid where they need to. We've seen them, we've seen big defenses of like the 200-day moving average on a whole bunch of big names, like Nvidia is a good example. A reclaim on Microsoft, etc. Like we've seen all these things start to come together. So until we see, the broader market start to shift on something like the S&P and start to fail, then again, I don't really think there's a reason to be bearish. So looking at 29,660s basically as the pivot for me early, and then, potential short rotations or potential, sit on your hands and wait at 29,520s. If we start to lose that, then we could fill down. But again, like, we hold 660s basically. I'm looking for last week's high into the higher time frame pivot of 30,060s up into 30,100s, and then up into the weekly value distribution of the all-time highs at 30,440s, and then ultimately, new all-time highs essentially. So we start to lose the gaps. What I'd want to see from a short perspective, if we start to lose these gaps, I'd also want to see us basically failing on the S&P 500, failing that multi-week balance breakout to look for bigger short rotations. So keep that pretty simple. The other thing I'm watching this week, I'm always watching oil, but the other thing I'm watching this week is gold. So gold has had a really nice breakout from a couple of months, a few weeks, if not a couple of months consolidation. But if we just look at this from like a really basic, TA perspective, that's all I really need to do on gold. Like, we have a huge downtrend break. I realize this is probably the first time you're going to see me draw shapes on a chart, but like at the same time, like this is just really basic. We have a really nice downtrend break on gold. We had really good volume. We had follow through day as well. We had a multi-week base of accumulation, and then we have a break of a long-term downtrend, through that accumulation base, and then we have good volume behind it. This is really simple to me. So like looking at this, I'd be a buyer of gold if we'd see pullbacks into the 4,200 range. I also think that, from a intraday perspective, the bigger picture to me makes sense that gold is getting bought. So I also look at that as well to say like, okay, well, some pressure's coming off the dollar. We have, we have more of a bid in gold Really what we'd want to see, to be, bullish on gold is a reclaim and bid of 4,500 and the 200-day moving average. We want to see that reclaimed. We want to see a lot of acceleration away, but we have the beginnings here of, what could be a decent move away from, this previous downtrend on gold. So 4,200 area I'm watching. Intraday I'll be watching dips as they get bought as well, looking to join those too. But the big thing for me is if I see dips into 4,200 area, then it's probably a really nice buying opportunity to get in this, and could already be late. I know some people that are already in this trade. I've caught a few smaller trades on it, but I'm not in like a bigger position on this break. Unfortunately, I just missed it. I wasn't paying attention to the gold market very much. So going to keep that in mind, just as something, on the side basically. But as far as the indexes go, I think it's relatively straightforward this week. I'm hoping we have, not summer of George price action like we have on Friday, and we have a little bit more cleaner of a view early in the week before CPI ideally, and we can get some points in and just kind of cruise the rest of the week. So this video helps. Like the video, subscribe to the channel if you haven't. Appreciate your time. Thanks very much.